Alright, so here I've got the Euro hourly chart, and what I want to show you is examples of the 4 or 5 different candlestick patterns which are considered important. There are literally probably 30 or 40 different types of candle patterns. Some of them are single candle patterns, some of them are 2 candle, and some of them are multiple candle patterns. But I'm going to show you examples of single and double candle patterns, and probably the most important 4 or 5 candles. So here we've got the Euro hourly chart, and what I'm going to do is get rid of all the lines on the chart, so we can focus purely on the candles and the Bollinger Bands. So I'm going to remove all the lines. There we go. And I'm going to scroll back along here and show you some of the most important candle patterns. So I'm just going to pick these out as we go along, and there's 2 good examples here. I'm not going to worry about whether we're bullish or bearish. I'm just going to show you the candle patterns that occur at either the 100 or the 200 Bollinger Band, or at the 200-hour moving average. And we'll also have a look to make sure that the stochastic is in line with the G7 entry signal. So let's start with this one, and assuming that we're bullish, I'm going to zoom into that. And you can see over here is a good example. Although the stochastic isn't quite oversold, it's pretty close. And here we have a candle, this candle here, which touches down on the 200-hour moving average with an oversold stochastic. So assuming that the direction is bullish in this case, we're looking for a reversal pattern. Now here's a very good example of a bullish engulfing candle, and I'm not going to worry too much about whether it engulfs the whole candle before it, but I'm looking at the body of the previous candle, and here you can see we've got a black body, and the next candle, this white candle, is the bullish engulfing candle, and what it does is contains the body of the previous candle, this black one, within the range of the body of this candle. So you can see there we've got a bearish candle, but the very next candle is bullish, but it also engulfs the range of this previous candle, and that's called a bullish engulfing candle. And perhaps we'll see examples of bearish engulfing candles a little later on. What's nice about this one is we touch down onto the 200-hour moving average, then we've got the reversal candle, and you can either enter right at the change of the hour or wait for a little retracement, and often I do that. So this hour closed, this one here closed at about 46.55, and just by waiting a little bit we could have got an entry at 46.45, so we could have saved 10 pips on our entry. And that's a little bit more difficult, perhaps for more experienced traders, but you can just wait for a little retracement. So we would have got we would have got in at 46.45 if we would have waited for the retracement, and the stop loss needs to be below the low of that reversal. Now in this case the reversal is these 2 candles. It's a double candle pattern, the bullish engulfing candle and the one before that, and we look for the low of that combination, which is at well, let me have a look here. The low of this candle is at 46.12, and so if we got in at 46.45 over here, we need to set our stop loss at, say, 46.05, just 7 pips below the low of this candle. And so 46.45, 46.05, that gives us a 40 pip stop loss. Now generally when trading with a G7 system of the hourly charts, you should aim for a stop loss of between 30 and 50 pips on average. If it goes a little bit over 50 pips, don't worry about it too much, but in all cases you should try and limit your risk to 2% of your trading account. So if you have a 45 pip stop loss, you could only trade a leverage of between 4 and 5 to 1. And we haven't actually discussed leverage in detail, which I probably will do on one of the subsequent videos. So that's a good example of an entry from a bullish engulfing candle, using the 2 candles, the one prior to it and the bullish engulfing candle, as the combination, with a stop loss below the low of those 2 candles. And naturally we're looking for a reversal signal according to the G7 system with all the other parameters in place. Let's go along to... Sorry, I just had a phone ringing there, which I had to turn off. So let's go across to here, and here's another good example of several reversal candles, an overbought stochastic, and we've gone through the 2 Bollinger Bands. Now bear in mind, if the 2 Bollinger Bands are really close together, in other words we've got a confluence of the 2 Bollinger Bands, then it becomes an even more powerful reversal level. And I've spoken about this in some of the daily reports and the videos, but just remember this: if the two Bollinger Bands are very close together like they are here, and let's just go back to that previous example, you can see here there's the grey 100 period Bollinger Band and there's the green 200 period Bollinger Band. They're not close together at all.